The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 13th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off early if you would, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den like Rahul, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we've got slightly mixed bag out there. The slightly mixed is coming from the semis. It's the only indice trading the upside, up 10 points right now. Dow's down 221.5%. 0.6 for the S&P are 36 points, over 1% for the NASDAQ, just over 1%, 197 points there, 15 points for the Russell, tranny's down 78, NASDAQ Composite down 182. Gold is trading up $32. That's up 1%, 29.78 the print. Silver's trading down to 34.09. That's up 35 cents. Light Sweet crude is off 76 pennies. Natural gas is up a nickel. Trade out of 413. If we take a look at signals, you've got a TD9 count top that's going to go ahead and form today inside the Great British Pound. That's assuming that the Great British Pound closes above, this is today, closes above 1.2910. What that should then do is that the pattern will complete tomorrow. We should see price pull back to its oscillator and change line, currently printed about $1.28. If it closes below that, then we'd be looking at lower price, I'd say back to the 126 level. That's the weekly oscillator and change line. As far as other TD9 count signals out here, you got the Dow Diamonds formed bar number 8 yesterday. They're going to go ahead and confirm a TD9 count pattern today. All the Dow instruments are doing the same thing. So they complete that pattern tomorrow. What that suggests is that a rally should unfold, taking us up to the 423-ish area. That's the daily oscillator and change line. Now, the TD9 count is not a guarantee of a bottom. So whatever the low of the pattern is, whether it's the low of yesterday or the low of today or tomorrow, the lowest low of those 3 days, if price starts trading below that or closes below that, then that would tell you and I that the Dow Diamonds, just take a look at the ETF, would want to target the 392.61 level. That's its breakout area. That is its next level of support to the downside. Other signals out here, utilities, we've already covered that. New York Stock Exchange. So it's kind of an interesting one. When you can take a look at the indices, you got the Dow Jones Transports. They are in form bar number 8 yesterday, just as the Dow Jones did and the New York Stock Exchange. So you got 3 indices, in essence, that are doing the same. So you're going to get a confirmed TD9 count bottom pattern in the New York Stock Exchange today. All that needs to do is close below the close of bar number 5. That seems like a likely outcome. It'll complete that pattern tomorrow. Again, it should rally up towards its oscillator and change around 19,452. If you take a look at the transports out here, transport's getting hammered. Once again, they're trading down at 14,585. Today is bar number 9 of a TD9 count. It will go ahead and confirm that pattern today. It'll complete that pattern tomorrow. Now, if we take a look at the weekly time frame, I'm noticing that price is back towards a prior swing point. Oops, didn't mean to squish it like that. That was a super squish. So you've got this swing point here. This is what I'd be watching for. Does price close back above June 14th low out there It's the daily, weekly time frame. That's at 14,547.90. What if it doesn't? If it doesn't and the TD9 count pattern doesn't hold, 13,647 would be the likely target. It's TD9 count breakout area out there. So I don't think there's anything else here necessarily to take a quick peek at. Let's go take a look at the daily equity future contracts. I'll start off by looking at those. All four of them have A to B equals CD patterns to the downside. All four are waiting for bullish reversal candles to confirm a bottom. The Dow equity future contract, it's not going to matter because it's going to go ahead and form that TD9 count bottom pattern today. What else can we learn from this? Really not much at this stage of the game. Let's go ahead and close those little puppies out. No reason for us to go back there unless we actually need to. And right now I'm not seeing the need. Let's take a look at the intraday charts out here, see what we have going on. From an intraday perspective, here's the ES Mini. What do we see on the ES Mini? Just looking myself, folks. What do we see on the ES Mini? I was looking for any good news. So the downside, I don't see any key levels of support, really. I don't see any key levels of support. The only key level, price is already taken out, I believe. That's the low from a 240-minute bar at 55, 59.25. Did we close below 55? No, we didn't close below that. So that's really the only key level of support. 55, 50, 25, that's the 120-minute TD9 count breakout area. I'd say if price closes, well, okay, so here's the real support level for the ES Mini. If things are going to get rolling to the downside, price will close below 55.34. To the upside, you choose your resistance levels. We're below all kinds of profile levels out there. So, it's take a snapshot of this because it's just nothing but resistance up above. That's going on inside the NQ. If we take a look at the Dow equity future contract, right, that's when it's going to go ahead and confirm a TD9 count bottom pattern today, complete that pattern tomorrow. Does it have any other bottom signals out here? And the answer is that it does. Those would be negated if we take a look at the 2-hour time frame bullish hammer candle that confirmed a Rhodes momentum indicator bottom. It did this yesterday. That low is 41.047. So that's the key number out there. It closed below 41.047, and we go on. Again, it just continues with the TD9 count pattern. But what it would suggest is that potential of that bottom really wouldn't start to unfold until tomorrow, the bar after bar number 9. So that's what's going on with the Dow. That's what's going on with the ES. Let's try the NQ here. We should be able to get this in before we head to the, we're not going to do it that way. NQ 0325. There we go. So let's get the NQ up here and see what kind of signals it has. If this market's going to rally, it's likely going to be the NQ that's going to lead things off. I see all kinds of bottom signals out here. The most key level is coming from the 2-hour time frame chart. TD9 count bottom formed at $2,200 back on the 10th out there, and that low is 139.25. If price closes below that, we're definitely headed lower. So that's your key level of support. Resistance, again, you can pick a cadre of resistance points because we're trading inside of profiles or below profiles across the board out there. Again, that NQ does have a new bullish structured daily profile. That makes 19,734 a real key level. The price closes above that, we should see a further rally. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's start taking a look at the requests that have come in. I would love some more. Steve at TFNN.com. If you're listening in live, just send me an email. And, of course, inside the Tiger's Den, any ping. So let's take a look at XRT. This is for GTE. XRT on the daily time frame negated a TD9 count bottom pattern 2 days ago. You're in bar number 7 to the downside. It's in an A to B equals CD pattern to the downside. Looks like you're probably about the 1 to 2 level out there. A bullish reversal candle would confirm a buy the D point pattern on a daily time frame, and that would suggest a rally up towards the 70.48 level. The weekly time frame chart, tomorrow if it closed below 68.48, it is back below a support level. It's breakout level. That suggests lower price. The monthly chart is trading below profile support at 69.83. That would suggest moving back towards the lows from back in 2022, 2023 out there in about the 56 dollar level out there. So what you're watching for right now is you're really watching the daily time frame. I'd say you're looking for a bullish reversal candle. I think that gives you a counter trend rally. That counter trend rally may only lead to a 2-session rally out there. Duncan Steve would like to take a look at SOXX. Let's go take a look at the semiconductor ETF out here, the one that actually tracks the SOX. The SMH does not. If we take a look at the SOX out here, it is trading below profile support, below its oscillator and change line. That key level of resistance out here, there's really 2 of them. Let me provide those to you, Dunk. One is, 199.56 is the bottom of the profile. Stationary. That's not going to change until a new profile. Then you got the oscillator and change line that is just slightly above that. So that is the daily time frame. I would be probably really hard pressed to try to find an A to B equals CD pattern out here. I could find one. But you wouldn't like it. It would be a large one. Okay. Technically speaking, there is an A to B equals CD pattern to the downside. The next bullish reversal candle would confirm a buy the D point pattern for the daily time frame. If we look at this weekly time frame, now the weekly time frame is testing a real key level of support out here. That's the week of August 9th. 2024, and that low is 192.87. Now we're trading above it now, but if we close below it, what that sets up is the weekly A to B equals CD pattern to the downside, and that looks something like this, just to give you an idea. So the next day and a half is really important out here for the SOX. ETF out here. The A to B equals CD pattern would take us down into about the 167-ish type level. Now, volume this week, so far, 13 million shares. And that 13 million shares is going against 30 million shares. So it doesn't look like to me we're going to have the volume to push through that. That could be just simply a test and rejection of that low. So you go two different ways out here. A test and rejection says that you could rally, most certainly. But on that daily time frame, you can see those resistance levels up above. So it might not be much of a rally out there. And, of course, if we close below it, volume or not, then what that tells us is that, and it again being 192.87, that says that that would trigger an A to B equals CD pattern. On a monthly time frame, the SOX, which has a TD9 count top, is searching for support at about the 184.09 level. If that area fails, then we're looking for a move to 167.64. So that's what we see, Dunk. We take a look at the SOX. Let's take a look at your second request, which was CFLT. CFLT trading right now at 25.85. There's a brand new bullish structured daily profile that formed yesterday. That buy zone is between 24.50 and 25.41. We also had 2 days ago a confirmed by the D point pattern. That was confirmed with that bull sash candle out there. With price being above 25.41, if it closes above that today, what we should see, we were above it yesterday, so we just come back and retested it. What we should see out here, Dunk, is a move up towards its oscillator and change line. That would be at 28.21. Above that, if price is able to get above that, it'll start trying to target 31.73. That is the top of its new profile. Now, on a weekly basis, you've got a Rhodes momentum indicator signal. Price closed below profile support last week. We've the rally this week has found resistance at the bottom of that profile, 27.23. So that's saying we still likely have more to go to the downside. We've been down for 4 consecutive weeks. This would be week number 5. That should lead to at least a 1-week rally out there. No guarantee, but you would think that it would. So that's what the CFLT is doing. But longer term, at least at this point in time, looks to me like this still wants lower price. It's just a consolidation on a monthly time frame. The consolidation being between the levels of 22.01 to 39.09. That is its market profiles. A question put to us by Rahul inside the Tiger's Den. And the question goes like this. It's quite a question out there. It's pretty short. But the question is, I'm just looking for my page out here. The question basically is, when will this market reverse? I'm assuming that you're asking not just reverse, but bottom. There was a, well, the market, yeah, I think that's the question you're asking. All right, so it was the S&P that you were referring to, at least during that question. So we're going to look at the S&P 500 charts. We're looking at the daily, the weekly, and the monthly. And what we're really trying to do here, at least on the weekly and the monthly, is identify support. On the daily time frame, I can identify the next key level of support. That doesn't mean that it's a bottom, but the next key level of support is at 5406.96. That's short of any kind of bottom signal forming out there. That's on the daily time frame. The weekly time frame, a couple of things out here. So the key week out here was the week that established the January lows. The January low, that was the week of January 17th. That low out here for the S&P 500 is 57.73.31. My assumption is that we will close below that tomorrow. Last week, we tested, we closed just below it. Last week close was 57.70. The low of that swing point was 57.73. So in my mind, I was giving it, okay, just a few bucks, but now we gapped down on Monday. We're still holding that gap to the downside. We're trading towards session lows out there. Trading below the January lows is a potential problem. And that says, and the January highs have held out here. So the January high that came in was during the week of January 24th, up at 61.28 out there. Yeah, we made a new intraday high, but we didn't close above that 61.28. We closed at 60.13 the week of February 21st. So the real key high out there, my opinion, even though it's a bearish engulfing candle from February 21st, is really going to be the highs of January, 61.28.18. Now, we close above that, a whole different scenario. But right now, we're trading below the January lows. What this tells me is that over time, we've been down. This is going to be week number 4 to the downside. This would say, and this should suggest that we should see at least a rally. That rally may only be 1 week, could be 2 weeks out there. But it does look to me like over time, what price is trying to do, what the S&P is trying to do, is seek out its next level of support. I'm not referring to the daily breakout levels, but instead the weekly breakout levels. And that's about 53.24. I've drawn in a couple of trend lines out here. I've drawn in a trend line off of the 2020 low, use that touch point as well as the October 2022 low. And then I've used that October 22 low, and I've used as the touch point the October 2023 area out there. Remember, Octobers oftentimes provide us with pretty decent bottoms out there. So those are two key areas. So there's also some trend line support. So where's the trend line support as we speak right now if it were this month? It's down at about 5,100. So it looks to me, your question is where's, we take this one step at a time. One step at a time. But you're 4 weeks to the downside. Wouldn't be surprised to see a 2-month move to the downside. Last month was month number 1. And it may be a 3-month move to the downside inside the S&P. But I think longer term or intermediate term, the first place to be watching for is 53.2437. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We're taking a look at ticker symbol APP. This is for McGuppy inside the Tiger's Den, looking for a long-term entry out here. So even though the monthly time frame chart, McGuppy, has pulled back and has found support at this moment in time at its oscillator and change line, 235.66 out here, I don't know that that's the bottom. And the reason is, if you look at the weekly time frame chart, which has a Rhodes Momentum Indicator top, closed below profile support last week, remains below it this week. More likely than not, price wants to target 139.40 over time. When I look to the daily time frame chart out here, if we were to draw an A to B equals CD pattern, let me see if the B point was passed with volume. The B point, by the way, would be the trading day of February 26, 31 million shares. 31 million shares passed with 16, passed with 14, passed with 16. So it's just, there's an A to B equals CD pattern to the downside that's been triggered. It just hasn't been confirmed with volume. And now all we have really is price trading between the support that it found on the monthly time frame, 235.68, and basically the daily oscillator and change line. We do have price that is trading with inside its profile. So you're looking for a long-term entry. And Stevie's going to have to say at this moment in time, unless things change, unless price starts trading above the daily oscillator and change line and things really start to improve, that more likely than not, that next target to the downside, well, the next target to the downside is going to be 200, and then below that, 107. And in between those two would be the 139.40. So those first two came from the monthly chart. The 139.40 is coming from the weekly chart. So I don't see it now. You're looking for the long-term entry, even though price did pull back and test and reject that monthly oscillator and change line. So I hope that helps you out. We had Nicholas write in, and Nicholas's question is really more about the kind of going back, if you will, I guess, to the S&P 500. And his question is, he says, good morning, Steve. My question is political. Doesn't seem like the Senate is going to get enough Democratic votes to pass a continuing resolution. Down we go, question mark, question mark. What I've not done out here is we've had so many times where we've seen we've seen this instance, and I have not really gone back to see how the market has traded on those specific days. So I'd go back if you really wanted to try to answer that question, Nicholas. I'm not going to spend the time. I just don't have the time. That's when I say I'm not going to spend the time. I don't have the time right now to go back and really take a look at that. And I'm not aware of that being a option with inside of CSNEX. But what I can say is that it certainly is not good news, and we don't have any kind of bottom pattern on the daily time frame, weekly pattern, or monthly time frame for the S&P 500, and that's not going to form likely today. Maybe tomorrow, bullish reversal candle out there. So is it likely to head lower? Well, then the charts are suggesting that, yeah, that would in fact be the case. And it just gets us back to looking towards the 53.24, the rising trend line inside the S&P 500 when we take a look at the monthly time frame. So that's really all that I've got. No idea whether those bills will pass or won't out there. Let's go on to the next question. That comes from GTE. Stevie's got to find it. Is it here? ACWI. It is. Perfect. So we take a look at ACWI. So here's what we know is that yesterday it tested and rejected a swing point. It's a swing point from the trading session of January 13th. Volume there, 2.1 million shares. Yes, I'm sorry, it was 2 days ago it was tested. It was tested with 3.8 million shares. So 3.8 went against 2.2. That says we should get back down there and test it again. We did that yesterday. It was 6 million, still testing it. That said, even though we rejected it yesterday, we should still get back down there and test it. That's what we're doing today, and we're trading inside that swing point. Now, today's volume in 2 hours of trading, 953. So it's about 3,000 shares. It's about a 3 million share a day. You're pushing into that swing point now today with volume. That suggests that ACWI wants to go test that low, 115.05. If it takes out that low, closes below that low, I would say the next price target would be down at 110.19. 110.19 is the weekly TD9 count breakout level out there. In order for that to happen, we really need to see a close below 115.05. So the 110.19 doesn't take place unless you get a close below 115.05. The monthly time frame, we're trading back inside profile, but more importantly, we are below that oscillator and change line. It has lost momentum. It had that momentum going ever since November of 2023. So now it's lost that. Its next level of support to the downside, 108.96. So daily pushing with volume into that swing. You got to see what happens there. If it takes that swing out, then we have some identified levels of where price is likely to target to the downside over time. ELO wrote in. Would like to take a look at the ticker symbol AG. So let's get that up on our screen out here. AG trading out at 647. Beautiful. Looks like it's breaking out of its sideways consolidation move on that daily time frame. But you are in bar number 7. So even though I could draw in the consolidation measured move out there, I don't think there's any reason to do that. You're likely to get a TD9 count top. Strong move today for sure. We're trading above resistance. Here's the top of that resistance. If I use my the top of the consolidation pattern around 624 or so. If I use my this is my cursor out there. So assuming it stays above that tomorrow, now today's only bar number 7. So if there's a higher high that takes place on Friday, Monday, or Tuesday, you likely get that TD9 count top, and then price would pull back towards support out there. Right now that's at 583. If we look at the weekly time frame, the reason why I believe that it should rally further is if you look at the weekly time frame, we are trading above profile resistance. A new profile formed last week, ELO. 613 was that resistance level. We're trading above it. Seems like with conviction, nice wide-ranging bar. That suggests it may want to rally all the way up to 727. When we look at the monthly time frame chart for AG, it is trading inside a bullish structured monthly profile. This says that over time, as long as it closes above 603 at month end, we ought to see a rally that takes us up towards 764 or 839. So all is looking good with AG out there. It's just that I think they're in store for a TD9 count top coming in the early part of next week out there. Can't guarantee it, but that's certainly what it looks like when I take a look at the daily, the weekly, and the monthly time frame. ELO, always good to hear from you. Thanks for your request. GTE wants to take a look at ticker symbol EWG. Is that Germany? Is that the ETF for Germany? I think it might be. For Germany, it'd be better probably to take a look at the actual German DAX out there. But the EWG has a Rhodes Momentum Indicator top, price trading below profile support on the daily time frame. Its next level of support is sitting at 35.97. 35.97 is the weekly oscillator and change line. A TD9 count top will go ahead and form this week and complete next week. That says that by next week, at the end of next week, if not already, we should see a move back towards 35.97. If price were to close below that, then we'd be looking at 34.61. That's a daily TD9 count breakout level. That's what we see when we take a look at EWG. Marvin writes in, he wants to take a look at HUBS. Now that I believe I'm going to have to get going. We're about to go to break here. Yeah, so I'll get HUBS, HubSpot maybe, something like that. So we'll get HUBS up on our screen. We've also got a request to take a look at EFA. So those are the only two that we've got in here. If you'd have a request inside the Tiger's Den, go ahead and post it. Otherwise, send me an email. Send it quick to steve@tfnn.com. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the HUBS. I think this is HubSpot. This is for Marvin. He's looking for a swing trade out here. Marvin, I think you're going to have to wait a little bit longer. So this forms a beautiful Rhodes Momentum Indicator top out there. Since then, I could draw in an A to B equals CD pattern to the downside. That really wasn't. There was a gap to the upside, but that gap has now been closed. So that doesn't really have a bottoming pattern. You have price that is trading right now with inside a bullish structured profile. So your buy zone is between 589.02 and 604.90. For this instrument, resistance at 636.68, that's profile resistance, and the oscillator and change line is above that. The weekly time frame chart, what we have out here is price trading below profile support. It's suggesting that over time, this is going to be 4th week in a row to the downside, so you're looking for a swing point. Odds are favoring that you could get at least a couple-day rally out here. But right now, the weekly chart is suggesting what it wants to do is get down to 488. On a monthly time frame chart, there's really nothing in the way of that unfolding. In the case of the monthly time frame chart, it had a beautiful rally, rallied right up into that TD9 count breakdown resistance level up at the 822.34 area. But short of just simply number of weeks to the downside out there and the bullish structured profile, I really don't see much of a trade here inside of HUBS. Marvin, thanks for writing in. Always good to hear from you. I hope that helps you out. The next request, the only other request that I have, coming in from GT, he wants to take a look at EFA, which I believe is France, the ETF for France out there. Really what we should be looking at is the FTSE. Here you've got a daily Rhodes Momentum Indicator top. A price likely targeting its breakout level down at 79.48. You've got a weekly TD9 count top that is going to go ahead and confirm tomorrow as long as price closes above the close of bar number 5. So that's the TD9 count top for tomorrow. Needs a close tomorrow to end the week above 81.93. We're at 82.34 right now. The monthly chart still has a TD9 count top out here. That level has targeted. So volume coming into that TD9 count top on a monthly basis, 203 million shares. We're about halfway through the month, and we're with 143. So you're moving higher with volume out there, at least on the monthly time frame chart. That's all I've got for EFA. That is all of the requests. How about that? I believe, app was covered 5 minutes ago. So go back and if you can, please listen to the replay. That would be great out there. In the meantime, let's take a look at a couple of things. Let's take a look at what's going on inside the New York Stock Exchange, the advanced decline oscillator. So top portion chart, we're looking at the left chart out here. Got New York Stock Exchange. We know that a TD9 count bottom pattern will confirm today, complete tomorrow. Man, this is suggesting that we should get get some type of rally out of here. We're down at the minus 149 level. We did work off a little bit of that oversold condition yesterday, but we're now right back down. A close back below minus 150 gets us into extreme oversold. Now, if you take a look at the spot VIX out here, we can see that it is traded and has found support at that oscillator and change line. That's at 2401. So I would say the 24 area is a key level to be watching during the, well, look, I'll tell you the most key level is really yesterday's low. We closed below yesterday's low. That is 2389. Will also be below that oscillator and change line. That could be signaling to move back towards 1927. That is the 50-day exponential moving average of the for the spot VIX out there. 50-day exponential moving average 1927 out there. So these markets are getting hard to call. Maybe there's a request here. What's this message? AG if you can. I did AG. Yellow. I did get to AG out there. I think that was the direct message. Maybe not. Sometimes that might not have been it. And sometimes I have a hard time dealing with this Discord stuff. Let's go take a look at, what else do we want to look at? Just come back here, take a quick peek at the equity futures. Nothing. Let's take a look at gold. Let's put gold up here, right? So to the gold contract, we are in April. We got gold rallying to new all-time highs today. It's in terms of U.S. dollars. I'm assuming that we are new all-time highs in terms of some other currencies. I don't really want to turn on my e-signal system out here because it could just tie up everything. So let's take a look at gold. What's going on short term? Short term on a 10-minute basis, gold has or is forming, is attempting to form 2.5 minutes to go. Rhodes momentum indicator top with price trading with inside his profile. Its support is a buy zone between 29.73 and 29.76 out there. TD9 count top has confirmed for the 15-minute time frame chart. That suggests a pullback to 29.75. That is its oscillator and change line. So that's lining up with a 10-minute time frame chart. The 30-minute time frame chart, I'm assuming that, no reason to make any assumptions here, that I could find an A to B equals CD pattern. They can find a bunch of them, really. You know, it's which one. I don't think this one here has completed, but let me just make sure. I mean, this is the most logical one, but and that's probably a 0.382 retracement. Oh, I was wrong. It has completed. So on a 30-minute time frame, if we were to see a bearish reversal candle, that would confirm at least a short-term top and suggest move back to 29.69. So we'll watch the 30-minute time frame. No bottom signal on the, no topping signal on the 60, no topping signal on the 120, no topping signal on the 240, no topping signal on the 300-minute chart. And if we take a look at the we're negating right now a TD9 count top. That gets negated today on a daily chart with a close above 29.74. So what we really need to do is take a look at the weekly chart out here. So let's go from this chart. Let's come over here, and we'll put up gold. We'll get the now, because it's the April contract, we'll start this way. Let's see what kind of data I'm able to procure from the April contract out there. Otherwise, we may need to switch over to take a look at the continuous. I hate to do that because the profiles are not reliable. So the top of the profile, interesting. So you know what gold is doing on a weekly basis? It is putting in a TD9 count top. Last time, and this would be the bar following bar number 9. Let me put up the continuous contract just to make sure that I've grabbed all the proper data, that everything has been properly accounted for here. I believe that it has, but what we see on a weekly, this is interesting. So we see on a week, dailies right now negating a topping signal. Rhodes momentum indicator signal is present, so a bearish reversal candle would confirm another Rhodes momentum indicator top. Yeah, so this week is going to be the completion of a TD9 count top, and on a monthly basis, it's going to be the confirmation of a TD9 count top. So this makes next week or the week after, pretty important. Why? Because if price is able to take out the high of this week, because we're going to have a weekly TD9 count top completion, period, end of story out here. If price is able to take that out, that tells us about a strong upward momentum move for the weekly time frame. The daily would have negated a Rhodes momentum indicator top, and the monthly says you're in bar number 9 now, but that top might not form until the following month. In other words, the month of April out there. So that's what's going on with Goldilocks. So this is going to get pretty interesting, and this says we really want to be paying attention, certainly to the daily time frame out there. If we put the GDX up here, it's not at new all-time highs, but it is trying to take out, I believe, well, let's just see what it's doing. It's taking out its daily swing point out there. No topping signal on the daily time frame out here. If you look at the weekly, it's going to confirm a TD9 count top this week for its weekly time frame. That was a GDX. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at PPLT. Jim in Palm Harbor, I finally figured out how to what that message was. So nice to know that you're inside the Tiger's Den. Jim wants to take a look at platinum. We're looking at the ETF PPLT, which is trading above profile resistance and above its oscillator and change line. Jim, this wants it had a nice TD9 count bottom, and now it's got an A to B equals CD pattern to the upside. Looks to me like it wants to go target the 91.27 level. That's a daily TD9 count breakdown area. The weekly chart is also trading above profile resistance and its oscillator and change line. Now it's got this shooting star that it's going to have as a potential resistance. That's going to be at the price point of $91.50. You're trading inside that swing point, which had volume of 1 million shares. This week you have 641. So you're trading into a light volume. Doesn't matter really about this week's volume, but next week's volume might be important. That could be setting up an A to B equals CD pattern to the upside. On a monthly basis, nothing more than just a sideways consolidation between 79.47 and 96.35. Phil writes in, that's Brent in Martinez, California. Brent says HSLS is what he'd like to take a look at. I'd appreciate your analysis. You went long a couple of days ago based on the weekly chart. So let's see what we can do here to close out the show here for Brent. Again, ticker symbol here is SHLS. So this formed a Rhodes Momentum Indicator bottom pattern yesterday. Today it has gapped up and it's trading inside its daily profile, Brent. That daily profile's got support at 296, resists up at 333. I'd love to see it close above 333. That would be a signal of a move to 460. That was the daily time frame. I know you got in because of the weekly time frame, which this week will form a TD9 count bottom, and also looks like the weekly is going to form a Rhodes Momentum Indicator bottom. That's a good signal. We also have wave 7 out here as well. What you're looking for here is for price to close above its oscillator and change line. I'd like to see it close tomorrow above 315. If you do, that says it's ought to move up towards 437. It's an area where a counter trend weekly rally would come to an end, Brent, would be between 437 and 504. So you're going to eventually be looking for a close of a 504 out there. Hope that helps you out. Thanks for the request. Folks, stay tuned for all the great programming. I'll be back with you on Fantastic Friday, but I want you to have a terrific Thursday. Take care and be safe out there.